So, hello and good morning, everybody, or possibly good afternoon or good evening, depending where in the world you are. So, thank you very much for being with us today for FTI Consulting's insurance webinar in consultation and in conjunction with the Institute and Faculty of Actuaries. My name is Neil Reynolds. I'm a Senior Director at FTI Consulting, and I'll be chairing today's discussion. So before we kick off, we just have the usual housekeeping notices. So please remember that you cannot be seen or heard. So if you have any questions as we go along, there will be a panel discussion at the end. So there's a Q&A button at the bottom of your screen. So please use that to send in the questions as they occur to you as we go through the discussion. And obviously we'll cover as many of those as we can during the session at the end, which we anticipate will be around about 10 or 15 minutes, depending on how the conversation and roundtable discussion goes. Also, if you have any technical difficulties, then the Q&A button is what you need to use as well. And that should put you straight in touch with a moderator from the Institute and Faculty of Actuaries. So to introduce our panel members, first of all, I'd like to introduce Angela Darlington. So thank you, Angela, for being with us today. Angela is CEO of Aviva's UK Life business. So she has the unenviable task of steering a major organization through against a very difficult market backdrop at the moment. So previously, Angela was Chief Actuary at Aviva and also its group CRO. Secondly, we have Lance, who I can't see on my screen at the moment, just a box. So there he is. Just in time, Lance. So Lance Burbidge is Chief Investor Relations Officer at AIA in Hong Kong. So he's obviously seeing the crisis through the eyes of a wide range of stakeholders and investors in our industry. So he's in Hong Kong, as I said, and Lance previously spent 20 years working as an equity analyst in London. And then last but certainly not least, we have Graham Handy, who is a Managing Director for FTI's Global Insurance Services team based in London. So Graham is currently working with major insurers in the UK and across Europe, helping them navigate through the very turbulent and difficult times we have at the moment. So welcome everybody. So I think the easiest way to kick off our discussion is maybe just reflect on the last 3 or 4 months, look ahead for what might be happening for the rest of the year. So maybe consider what sort of themes have emerged over the last few months, where the industry's opportunities might lie in the near-term future. So Graham, if I could come to you first, maybe for a quick overview, and then perhaps Angela and Lance could add their thoughts afterwards.
Yeah, thanks Neil. Well, look, I mean, I think when we all look back on this period in time, it's going to be a hugely historic moment in time, isn't it? And I think the privilege has been as to talk with so many CEOs, C-suites, boards, and to work in the trenches on some occasions with folks trying to get through that unprecedented time in history. The observations I would make to kick off the conversation. So first of all, I think we should be extremely proud as a global insurance industry about the steps we've made to keep service levels satisfactory, to keep our customers in the forefront of our minds, and to provide that valuable level of extra security to people through difficult and uncertain, volatile times. The thing I repeatedly hear when I talk with execs is the strong recognition that we have a critical role to play as an industry in society. And at times like this, it all comes to the fore. That's been very much at the forefront of people's minds. The other thing which I hear is the fact that attention is now turning away from just keeping the engine running, keeping the wheels on the road, and the attention is turning to how we can ensure that we're set up as firms, as teams, as an industry, how we're set up to move from the short term to the medium term, and how we can essentially ensure that we as firms and as an industry win on what will be a rebound. It's not going to be a particularly easy rebound. It's going to come and go in waves. And so the other practical challenge that I know Lance and Angela and those listening to the call are facing is how we manage through extremely uncertain times. The thing which, there are three things which I think summarise what I'm hearing in terms of long-term shifts. So the first of those is around product. What's the nature of the insurance product that customers and clients need? How do we get the balance right between accessibility, cost affordability versus comprehensive and full protection for the risks that customers face? So that's product. Secondly, it's around capital. A very real question: how much capital is enough? And different stakeholders have got different views on that. And I think the real question around capital needs is going to come in the future rather than what we've seen in the last few months. And the third thing which I hear repeatedly is the question of change. So there are two things on change. First of all, the investment priorities for our organisations, have the priorities shifted? What are the most important developmental change programs for us now? And then the second angle to change is how on earth we execute in a very different working rhythm. The ways of working are not what we are used to, and getting new projects, new programs off the ground is harder than delivering ongoing projects. So those are my thoughts.
Okay, thank you, Graham. That's really interesting. So I think just picking up your three themes there, which seem to be that the products, the capital position, and also change. And if I can bring you in, Angela, so I guess you thought about similar issues in Aviva, but could you talk a little bit about how you're trying to ensure Aviva is well placed for whatever lies ahead?
Yeah, sure. And thanks for inviting us to be here today. It's good to talk to an actuarial audience. As an actuary and a CEO, I do like to maintain my connection with the profession, even though I probably don't practice quite as much as I used to before. Yeah, and it's interesting what Graham said. I think we found that almost kind of what we thought was a really hard phase of the crisis, the initial phase, actually you look back on it and now and think it had many really positive features. So, as we were coming into this crisis, I think the purpose was really, really strong in organisations like mine. So we know that we look after people and the families of people who die and people who are ill. And so actually that takes you a long way when you feel like you've got a strong purpose as you're going through this and some of the difficult things that we had to do. But also focus was incredibly high as you go into something like that. We knew we had to get our people, we had to focus on our people being safe first and foremost. That drove real action. We did things that we didn't think we could ever do in timescales that we didn't think we would ever do them. And we had to focus on servicing our customers. We had to know exactly what the critical services were that we were providing in that period. People needed to get hold of their money if they really needed it. People really needed to have their claims dealt with quickly and sympathetically if they suffered the ultimate kind of consequences of COVID. And so that focus actually gives you something which a big organisation often doesn't have, and that was a real positive as we went through those initial phases of the crisis. But we were also clear that the other thing you have to do as you go through that is making sure that you're safe for the future. so that you're managing your balance sheet, you're managing your distributed relationships, you're managing the customers as well as you can, so that as you come out of the crisis, you've got as many options as you can, because that is one of the critical phases in any crisis. So I guess we're now settling into BAU. We're all kind of a bit bored of the same four walls. We have got some people in our office, people who are struggling for personal reasons. I think people are tired. They're in that sort of phase where we can't quite see the future path. We've been through this high energy, high adrenaline period, and really now it's about sort of starting to look forward. And I think actuaries will understand that actually the key thing that we're facing into going forward is uncertainty, and we're actually very well placed to help with that. You know, initially it was about modelling the cost of claims. So what, you know, over a cycle, what impact might this have on our customers? What age profile might we have? And how might that play through into both our servicing volumes, but also into our financials? And we had a really wide range. We had some really big numbers at the beginning, and slowly but surely our models have got better and they've narrowed down, and we've got a much better understanding of what the kind of the physical impact of COVID might have, but still a really wide range. I think, you know, we've on our balance sheet as well, there's a wide range of potential scenarios in the future, and I think our role is really to do lots of scenario planning, to look at, you know, how good it could be and how bad it could be, and try and narrow that range of impacts on our business, and make sure we've got optionality in wherever we can throughout that. So there's been a really important part of our actuarial teams doing capital modelling, doing scenario modelling, doing assessments on longevity and mortality and morbidity and health businesses throughout this. But I do agree with Graham, there are some opportunities too. I mean, affordability, I think, you know, I don't have affordability versus comprehensiveness necessarily in my business. I have affordability versus kind of awareness that you need the product. And I definitely think there's an economic impact on affordability that will come through, but equally people are more aware of their need to protect their family, to protect their own well-being, to think about the consequences of some of these things on their family, their finances, and the extent to which that means maybe people save more, they might protect their family more, they might buy more of our products. So we've got some really interesting sort of things to think about in there. And I think the other thing is which probably wasn't on your list, was digital. So the extent to which people have learnt to have Zoom calls with their 80-year-old grandparents that they couldn't see for a month, actually that is changing the nature of how we do things, and whether insurance companies and whether IFAs and our distributors are kind of embracing that. I think that will be a really key area of success, helping our distributors become more digital with their customers, and becoming more digital with them is going to be a really key theme. And then how do we manage all the flexibility that we've built into our lives over this period? For all of the boredness with the four walls, I've really enjoyed not travelling. I've enjoyed spending time with my family. And how do we build all of those positives into our future as we go back into the office? So that's my quick canter through, I think, a bit of history and a bit of where I think we're heading.
Thank you, Angela. That was really interesting. So quite a quick canter, as you said, but you managed to cover a lot of ground in there. So just briefly before we go on to Lance, I've had a message. There are a couple of people who've raised their hand, so maybe they didn't hear the announcement at the start. If you have a question, then please use the Q&A button, and that'll be the right place to make sure any issues are picked up. So sorry about that, Lance. If we can come to you now, then you're obviously in quite a different position. So you're constantly engaging with outside parties, with investors, with wider stakeholders. So just picking up on what has been said, I mean, can you add your own thoughts about what have been the biggest challenges over the last 3 or 4 months, or however long it has been, and also what lies ahead in maybe for the rest of the year in terms of what we need to focus on?
Yeah, and hello to everyone, and I hope you can hear me. I think I wanted to echo actually some of the things that Angela said, and although I'm external facing, I'm obviously internal facing in terms of understanding and helping the business run itself. And actually, given where we're based in Asia, and we have a big business in mainland China, that actually it's been 6 months that we've been going through this, and I'll come back to that in terms of timeline as one of the biggest challenges in a way. But internally, in terms of getting the business, to cope with the challenges that everybody has been facing and making sure that it keeps running day to day, I think to some extent we were in a slightly privileged position in Asia, that a lot of our business is quite digital already. We kind of have bypassed some of the stages of the life industry in many other markets, and you're probably all aware that agency models are still very prevalent in Asia, and so we're probably, from the outside world, seen almost as a dinosaur in the way that we operate, but actually 95% of our business in terms of new business submission is processed through mobile technology by our agents. And so actually the digital adoption of our business and our customers was already very high. And so coping with financial systems that in some of our markets, for example, in the Philippines, there were a couple of days early on where the financial system closed down entirely. So actually having digital capabilities and accelerating some of those was really the main thing, I think, that our business is really focused on, to make sure that day-to-day service can continue, that we can continue to pay claims, because as Angela said as well, that is the most important thing in terms of looking after our customers. But that incredible focus that was going on internally in the business made it somewhat more difficult to communicate externally, and the timeline that I mentioned is kind of the interesting part from my perspective, that about 70% of our investors as a listed company in Hong Kong are actually based in Europe and North America. And so, we were going into COVID lockdowns, particularly in China, and to some extent in Hong Kong, months before it was happening elsewhere in the world, actually. And so, a lot of my communications was actually trying to explain to people what was going on, and really what was happening on a day-to-day basis, because it was very, very clear when I talked to people that were sitting in New York before they started to start work from home and understanding what was going on, that there was just no concept of really what was happening. And actually the reaction in a market such as Hong Kong, that had suffered from SARS back in 2003, meant that it was very, very, very seriously taken. I mean, we've all been wearing masks. I don't have a mask on now, but it's very, very commonplace. Nobody goes outside without wearing a mask. It's been very typical in that way. So I think the early stages of the pandemic were really trying to get people to understand what was really happening, what was covered by our policies and what wasn't covered, and where medical systems interact with our policies in terms of what was really covered. As Angela said, trying to predict what mortality was, of course, was extremely hard when there was no data to go on. So the wide range of possibilities in terms of what potential claims could be, meant it was actually a pretty difficult thing to explain to people. And then as the pandemic grew, you had much more widespread issues in terms of stock markets collapsing, interest rates dropping to all-time lows, and I mean, they already are in Europe, but they collapsed in the US in the middle of March, just around the time that everybody was reporting their full year results. And so things changed very, very quickly in terms of what people were interested in, and trying to get information out of 18 businesses across 18 markets in Asia to actually try and have a coherent story and understanding as to what was really happening, I think was pretty difficult. And now, we're in a position, obviously, that in some of our markets, like mainland China, we're coming out the other side, actually. And so, GDP actually grew. That's just been announced this afternoon in China in the second quarter. So actually, our businesses are all at different stages in terms of where things are. and that kind of constant communication to get people to really understand where things are happening and where they shouldn't be too over exuberant in terms of recovery, I think is being one of the big challenges for us in terms of making sure that that information was flowing.
Sure. Okay, that's really interesting. Thank you very much, Lance. And I think that's led us naturally into maybe just looking a bit wider, so maybe looking globally. So I know, I mean, everybody on the panel has a viewpoint and perspectives outside their own market. I mean, Lance, you just talked a little bit about Asia, what's happening there on the insurance scene. But as I said at the start, you've been in the UK for a long time before that. So maybe just kicking off with Lance in terms of, if you like, talking about the differences that you've seen in the insurance environment, and perhaps how the brand of insurance is seen in your respective areas. Because I think, Lance, unless I'm wrong, I think there's been less sort of pushback against insurers in Asia, certainly compared to maybe what we've seen in the UK, and certainly what they're getting in the States. So maybe Lance, if you could start on that.
Yeah, that's right, Neil. I obviously look at news flow around the world because it's of interest in terms of how I have to talk to our investment community. But it's been very clear, I think, that insurance is seen as a positive service across most of our markets, and I imagine that to some extent the lack of social welfare that is in most of our markets does mean that a lot of people do rely on insurance as that catastrophic fallback, and I suppose the nature of our products as well leads you to not be particularly exposed to concerns over whether you're paying claims or not, or you're quibbling over whether you should be paying claims or not, because the vast majority of our business is actually life insurance and health insurance, and even when it's classified as health insurance, it's not generally medical reimbursement. So it's critical illness. So really, it's just accelerated life insurance. And so, it's pretty difficult as an insurer to kind of get that wrong. Whereas I guess on something like business interruption, which is where the real kind of negative media side has come through, and you can get this sort of public backlash very quickly. It's pretty difficult for that to happen. And also, I mean, certainly from our perspective, most of our business is retail as well. So you don't get these kind of big disputed claims in the same way as you see in some of the other businesses. And actually, I know Angela will be able to tell us more about the UK side, but I haven't really seen too much in the way of life insurance really getting that much of a negative press in any shape around the world.
So, thank you, Lance. Can I bring you in there, Angela? And just in terms of, I mean, you're in charge of the UK Life business, but presumably you have an overview of various board meetings about what's happening in the rest of the world.
Yeah, sure. And I guess the question about life insurance and general insurance is one that's quite interesting at the moment. And I think, I would argue, as Lance would, that the life insurance side of the business has done what we said on the tin. We've carried on paying. We've got 2 million pension customers, so we've paid money to 2 million people who really needed that money through the crisis. We've paid tens of millions of pounds in terms of COVID life insurance claims. But unfortunately, those stories don't make headlines, and that's just one of those things you have to live with, right? Those customers are genuinely happy with the service that we've had and has been provided, but they don't. Those positive stories don't make the front page or the back page of any of the newspapers. So we do have to help. We do have to manage all of that, and I think across many countries, the sort of business interruption and health sides have been a challenge. Health is not so much in the UK. And for me, Graham talks a bit about affordability versus comprehensibility in products, and I think there's also a point of clarity, and so we welcome the FCA's legal case as providing some form of clarity much quicker than an ongoing sort of long drawn out process on BI, and we're not actually involved in that case really, and I think we would argue that our terms and conditions are very clear. Now, that doesn't make the person who doesn't have their claim paid happy, and that's really understandable. But the scale of the cost of something like a global pandemic is really something which the insurance industry is not set up to pay those sorts of bills. They're very much bills for governments to deal with. So I think there's been a very good conversation in the UK between government and the insurers to make sure that that's well understood. But the clarity of T's and C's is something which will undoubtedly come through as a theme through here, that people really do need to know what they are and aren't covered for.
Okay.
Yeah, I think just to round off the discussion, I guess that there are a number of differences that matter country by country, territory by territory. So one which sticks at the forefront of my mind is the weight of state versus private. And you've seen significant government intervention to prop up uncertain times and support the weakest in society. There's going to be an interesting dynamic, I think, in the future as to whether if it validates people's assumption they can rely on their government, versus what I think would like as an industry is for people to see the benefit of them taking personal responsibility for managing their risk profile and buying the right kind of products. State versus private. I guess the other observation I would just finish with is the level of regulatory sophistication, and I do think many on this call may disagree, but I do think that in Europe the Solvency II regime has lent itself to some intelligent reactions on the part of both insurers and regulators through the early stage of this crisis. I think there's an open question about whether or not Solvency II will be sufficiently flexible to deal with what is to come. And of course, around the world, market by market, you've got very, very different approaches to regulatory intervention when companies are on difficult tides. Okay, thank you, everybody. If I could just move on, but linking to a theme, I think Lance brought it up. He used the word a positive service, insurance acting as a positive service to society. So I'd just like to explore that a little bit more and see, is it actually possible, or what do we need to do more in terms of making insurers more of a positive partner for society, a force for good, if you like. I think, Graham, you also touched on this in some of your remarks, so maybe you can start and maybe say what you've been thinking around this area, and then we'll move on to Angela and Lance. So insurers as a force for good. As a force for good, yeah, as a positive service in society. Yeah, look, I mean, it's undoubtedly true. We are a force for good. I think, as Angela was saying, we don't get recognition for that. We tend to get recognition when things go wrong. But I think it's undoubtedly the case that people, families, and small businesses in particular, they're going to have to take a different approach to de-risking their own personal balance sheets, and we have an important role to play there. Trust is still an issue for this industry. It's a blanket statement. There are nuances, but there's I think a distinction to be made between those organisations who seem to have a more fundamental purpose and how they've been perceived by their customers during the crisis. And those companies were just perceived to be there as a money-making mechanism for shareholders, and that's not an insurance comment. That's true of many industries. So the question for us perhaps is, can we be seen as having a more fundamental purpose, and how do we get our customers bought into that? And then the other observation I'd make for discussion would be the emergence of the activist consumer. And maybe this is the flip side of what you were saying, Angela. They don't necessarily reward us for all the small good things we do, but I get the sense that we're going to be punished far faster, far harder if we're seen as being on the wrong side of history.
Yeah, so maybe Angela, if you can come in there. It's obviously not a new area, but it's a big area. So I just wondered if the pandemic has altered your view of this subject.
I think so. I think it brings some things more into, it really brings them into the spotlight compared to where we would have been in the past. As I said, as internally, I think we have a strong purpose, and we believe a lot in our purpose, and that does drive a lot of what we do. So it drove investment in our communities. It drove stuff that we did for the NHS in terms of our insurance. We gave donations to the Red Cross and to local emergency funds. So we did. I think our purpose actually drove a lot of local activity, which really matters to us and our people, even though we don't always get massive credit for it. And I think Graham's point about trust is really important. I mean, we don't actually manufacture something. There's no physical manifestation of what we do, and therefore we need to be very careful about building trust and maintaining it, and it being one of the things that we really try and focus on. But we're only ever as good as kind of everybody in the industry, and that's I think that's a collective that we need to work on. And one of the other areas that I think has really come into view as we've gone through the franchises is pensions, and our ability, as people's investments, people who may have been in drawdown, as their investments have come down, they've really needed help and advice. And the combination of pension freedoms and some of the rules around advice has meant that people aren't getting that. And I do think insurers would love to step into that space, and it's something that we're talking a lot with the regulators about, making sure that we can provide as much guidance and help for our customers as they really need at the moment. And sometimes the rules and regulations around us stop us doing things that we would really love to do for our customers, and that really doesn't help in some of those areas of trust. So that's that was something that we were working on before. We think it's even more important now as people are kind of trying to figure out how to live financially in their new normal as well. So I think we have loads of places where I think we already are a positive. I think we have places where we could definitely be a positive if we can manage to create that space to be there. And then we undoubtedly have some challenges that keep us in the headlines, which pull against that in terms of that overall balance sheet of the industry.
Sure, thank you, Angela. So you and Graham, you both talked about customers quite a lot, but if we widen it a bit just to stakeholders or shareholders in an insurer, and turn to you, Lance, then I mean, what do you think the sort of key actions and messaging should be over the near term?
Well, I actually do want to talk about customers as well for just a moment, actually, that not to be outdone. I mean, obviously, we did similar things in terms of supporting communities and providing, coverage for medical staff and the like, because, we think that's important, and we have, a similar purpose in terms of, protecting lives. But I think, the interesting thing for me is that when we do a lot of research around our markets in terms of asking customers about, why they won't buy our products or why they don't buy our products, or what is it that prevents them from buying our products, it's often the fact that they either are simply unaware that life insurance exists, and it's a reasonably affordable product in terms of financial protection, but more often it's actually that they actually believe they're adequately protected already. And then actually when you really delve into it, you realize that they don't even have any protection at all, but they just think they do. And the real gap is the advice that they have, that almost inevitably the advice that they rely on is either from themselves or from their friends. And family, and actually, so you know, it's a problem I suspect the world over in terms of the life insurance industry, that we kind of sit too detached from our customers too often, and that's the problem that you know, it's the advice gap that really I find the interesting thing, and you know, that filling that is difficult. But I think from an investor perspective, you know, the investors increasingly are driven by purpose and driven by ESG requirements. That you know, that is becoming increasingly part of the normal conversation, way before this pandemic had happened, but it has been accelerated by the pandemic. So I think you know, a company that ignores that and has done nothing and doesn't have a purpose behind it is in a much worse position from an investment and a long-term investment perspective than a company that does have that. So as an industry, we are in a fortunate position that you know, I think we all agree we have a purpose in society, and that is a very important factor in terms of why people may want to invest in us, in terms of you know, having a social good behind us. And you know, often ESG, you know, people will be thinking about climate change or governance or something like that, but actually you know, that kind of purpose is equally important. So we get asked about how we have you know, we're financially inclusive and helping people. So you know, this in a way is actually you know, something that we can actually shout about, and will continue to do so as you know, hopefully the pandemic or we get a vaccine or something. But you know, but we'll still be talking about that purpose for a long time to come, I think. And I think the other thing that from an investor perspective we have to make sure that people understand is that, coming back to Graham's point about Solvency II and just overall financial frameworks, that actually it seems to me that they've all coped pretty well from an insurance perspective, which you know, is an important part of trust ultimately, because you know, we have to be there as a company to pay claims, and if a financial position is in any shape or form threatened, and as an industry, that would take the whole industry in terms of its ability to actually serve the people that it wants to serve. Okay,
thank you. So, I mean, you brought up the ESG agenda there, Lance, which is clearly very, very important, and we're seeing it come through on some of the Q&As already. So Angela, I know, I mean, you're on the Climate Financial Risk Forum, the CFRF. So you have a key role. So how are you thinking about, I mean, obviously ESG, but why I guess the ultimate manifestation of that is climate change itself. So how has COVID, if you like, been a dry run for what might come in the future?
It's a really interesting question. You're right. I'm on the PRA and FCA's climate forum. I can't remember the exact name. And actually, I started on that when I was the group CRO, and we were doing a lot of work on scenario analysis, one of my favourite topics, on climate change. And you know, our view on climate change was that there's no point winning it's a game that nobody can win in, right? There's no point being the winner in a world when the world is kind of having such a hard time, and therefore it was one of the few areas where as capitalists our vested interest was in getting everybody into a place where they were thinking about climate change. And I think that's probably true of ESG too. And through our investment arm, we spend a lot of time screening companies for their impact on the world. And you know, climate change is a huge area at the moment. It's an area where it's really can be really difficult. You can get yourself into really difficult places in terms of morality, and are you imposing your morality on other companies? But our view is that not trying to do that is kind of something that we shouldn't be doing. We should have a position on some of these things, and we should use our influence as big asset owners to drive change in society. So I think COVID I think that was a trend that we were seeing well before COVID. I think COVID has made us as individuals potentially more aware of our impact on ESG, whether that's the amount of time that we travel, whether it's seeing fewer lines in the sky from air travel. So I think as individuals, we're all much more aware of our impact on the world, because we've kind of our norms have changed a little bit. So we think really clearly that our investors and our customers will want to see our ESG credentials happening in practice throughout our organisation. So whether that's from our physical offices being carbon zero, whether it's solar panels on the group, whether it's bees in our gardens in some of the offices, just going everywhere from the amount of time that we travel, the property footprints that we have, all through our investments, just making sure that we are thoughtfully thinking through our impact on the world. And that feels really important to us. It's our people to ask us a lot about it, but increasingly we're trying to think about, well, how can we bring that to life for our customers? How can we save the money that you give to us, which is your life savings that's funding your pensions? We will try and use that for more good than you could do individually through our ESG portfolios, through our where we choose to put our money from when we're investing in infrastructure. And is that in airlines, or is it in trains? Is it in wind farms, or is it in coal-fired power stations? Those are decisions we make day in, day out, which make a difference. And so making sure that we are we're trying to stay on the right side of history on these things, and that the people who look back in 20 or 30 years time at us think that we did the best with our contribution to change that we possibly could.
I think the other thing that COVID has brought to light is just how quickly the second order effects come through, and you got the transition risks. And just to take the climate model as an example, the fundamental climate consequences might well come 10, 20, 30 years down the track, but actually the transition issues come much faster. When governments impose policy, when governments force ways of working, when companies choose to do certain things a different way. So that was for me the biggest takeaway from COVID, was that actually in the end the mortality consequences of COVID are, sad as they are, controllable and modelable, but look at the size and scale of the economic consequences that we're facing, and that's the second order angle, which wasn't always necessarily reflected in people's pandemic scenario modelling. So that's useful, I think, because it gives yet another capitalist reason to take it seriously beyond the purpose-led and do the right thing for history lens.
Yeah, I mean, sorry, Angela.
I think, and one of the things that you want is that as you go into a crisis, you've got an investment portfolio that's resilient to many of those sorts of impacts. And whether it's climate change or a pandemic, if there are probably certain areas which feel higher risk from a resiliency perspective, and making sure that you're sort of thinking about that all the time.
Yeah.
And it certainly seems like insurers have a chance there to going back to what we said before, be a positive force in society and to do good from the climate change point of view. So I'm conscious of time. We have quite a big area to cover, which is, if you like, the operational day-to-day running of an insurance company. So insurers are complex businesses, and we have a lot of uncertainty at the moment in terms of obviously the pandemic, the economic outlook, whatever that may be. And we're hearing different things from our clients in terms of what changes they've had to make in the day-to-day sort of management, day-to-day operations, so decision making, reporting, etc. And I think we can include communications as part of that. So, I mean, Angela, if I can come to you first, I know, for example, you've in the past liked to go out and do site visits. So lots of things have had to change in quite a small amount of time, or a very small amount of time. Yeah. So if you could just give us your views on that, please.
Yeah. Well, interestingly, I've done 2 site visits so far today. So my
Right.
2 first meetings were site visits, but they're virtual site visits now. So I just have half an hour rolling around all of our sites, where we just invite everybody who's in a site virtually, and I give an update on strategy or new CEOs or whatever is the flavour of the day. And we normally do a mentee poll, so we find out how people are feeling. Tired came up as in both of our polls this morning, which I think probably feels about right for where people are at the moment. So we found all sorts of new ways of working and doing things that traditionally were really important and give us energy. I think what's been really interesting as we've gone through this is I think we've stopped things that we never thought we could stop. I think we've changed things that we never thought we could change, and we've changed them faster than we ever thought it was possible to make those changes. And we've come together as teams remotely, which we always used to think was something that you couldn't do. So we've been more agile, we've been more focused. Even our boards seem to run to time now when they run remotely, and they never used to do that physically. So it's interesting to observe all of these things, and also to observe the things that we used to do, which have served us well through this. So I do think our risk practices in insurance have really served us well. We know where our exposures are, we know what our market positions are, we know what our capital positions are, we know what our hedging strategies are, and having that as a base really helps you as you go through some of this stuff. And the operational resilience work, which we've done off the back of regulatory requirements that are coming in a year or two, has really helped us too. So we know what our critical services are, and we know how to protect those critical services. And so right at the beginning of COVID, we used that data. We were like, what are the critical services? How do we protect them? And what does everybody else have to do to protect those? So there was as an anecdote, there was a period in COVID where we didn't have enough VPN connections for everybody in the organisation to link into the office, and so we said, we know these are the critical people who need to link in, and everybody else is only allowed to link in the evenings and the morning. So if you work in an area that's not critical, you're going to do some weird shift work for a week or so until we can build that resilience in, and our people did that. But we were only able to do that because we had really, really good logs and registers of what the critical processes were. So I do think we've had processes that really helped us maintain service and do things creatively and differently as we went through. And those will become the new norm for us. And then working on being more agile and maintaining some of that stuff as we go back to work. So I'm fairly clear that most people don't want to work from home 100% of the time, but probably now far fewer people want to work in the office 100% of the time. And so somewhere in the middle of that will become the new norm with all of the things that we've learned built into it. And that will be great for lots and lots of people. It will be really good for their quality of life, but we have to find some balance in there because people will want to go back to the office.
I hope you're right. I'm sure you're right for Aviva. I think the general comment around the markets is similar in terms of things we're doing that we never thought we could. I hope it's not the case that firms resort back to old ways of working.
Right back to, yeah. I think our people don't want us to, and they will hold us to that. And our people are reasonably vocal, and they tell us when we're getting it wrong. And so I think we'll get that feedback loop.
Okay, excuse me, Lance, did you want to add your thoughts in that area?
Yeah, I totally agree that it's a catalyst, and actually I think I would hope that the best companies have used this as a catalyst for actually doing those things that are very, very difficult. So I mentioned earlier that most of our sales are conducted with mobile technology, but still there's a face-to-face meeting generally between our customer and our insurance agent. What we had to do when people were stuck in their apartments and not able to leave was actually make sure that we had secure ways of actually doing that remotely. So that we had to put that technology in. We had to make sure that the regulators were okay with us using that kind of technology, and it's there and it's across all of our markets today. And I don't think it will go back. The same is true of travel. That I think we were very guilty as a company that we have our head office in Hong Kong, but as I said, we have 18 markets around Asia, and people would fly to Bangkok or Singapore or Kuala Lumpur for 2 hours of meetings. I've had more video conferences in the last 6 months than I've had in my entire career. And I went into that thinking they didn't work, and there was always delays, and you couldn't have a proper interaction. But this is proving that we're all very used to that kind of thing now. So I think it's I think we will not go back to a lot of the things that we were doing, and that's a good thing. Yeah.
Yeah, I think it's interesting when you look at from the point of view we've sort of been 3 or 4 months into this, and we've all reacted in different ways, and lots of the operational parts have worked over that time. But then you think, well, what about things like innovation? Then how do we pick up those? How do we make that work in an environment where people are basically not there? They're not in the office. And likewise, when you excuse me, when you overhear conversations, or at the water cooler having an unofficial chat, and we've seen some of this, for example, on level 2 in terms of the 3 lines of defence. So I think they're apparently finding it quite difficult because there's a lack of informality that used to be there when you saw someone in the office. So I think maybe there's an argument that we've been fine so far, but do we need to do things differently if we're in this situation for another 6 or 9 months?
Well, I think that's right. I think what I've discovered is there's lots of there's pros and cons to that water cooler. So there was also a lot of politics and side conversations and agreements about things that nobody's actually agreed about in those water coolers, and lots of creativity and sharing and collaboration. And so I think we've lost some of the negative bits of it, and we need to find some ways to keep the positives, and whether that's having collaboration sessions, having drop-in points in the office where people can go in and they will connect and do some stuff. So I'm really keen that we sort of there's definitely some negative to the water cooler conversations and some positive, and we need to find a way to collect the positives and keep the negative in a box.
Sure. Okay. Thank you very much. Do you have any comments on that, Graham, or should we go to Q&A?
I think we should answer some of the great questions I'm seeing come through.
Yeah, I've got one here, which I've temporarily lost. But it was essentially talking about whether we now expect to see insurers disposing of non-core assets. So a sort of an operational shake-up, if you like. So do we expect that to start now coming out of the woodwork? So who would like to take that first? Angela, I'll pick on you if you like.
I'm not sure. I think it's going to depend insurer by insurer on what their strategy is, and if there'll be some insurers who decide they like focus, and maybe that will drive that, and then there'll be some others who feel like they need extra bits to be added on, and they'll be investing. So I don't know that it's a one-way street, but others might think it is. I mean, every sale has to have a buyer, so somewhere in that there's I'm not sure.
Yeah, what about you, Graham, in the conversations you've been having? Has this started to come up?
There's undoubtedly masses of capital washing around this world still. So for the right price, I think there'll be buyers. In terms of reasons to offload, I think there are some interesting dynamics on the non-life side, particularly specialty. Maybe the bigger theme is around shifts in risk appetite, shifts in risk tolerance, and now's as good a time as ever to tidy up the balance sheet, tidy up the risk exposures, and there are plenty of buyers out there for sort of finality risks, reinsurance to close, etc. That's on the non-life side. On the life side, I think I've just made the observation that so far capital ratios have held up extremely well, market by market, company by company. I think the telling point will be, how balance sheets behave through a second wave, and at that point, that might be a catalyst for change.
And I think certainly on that second point, Graham, that's what we're picking up in our various conversations. If that second wave does come, then first of all, there's the operational challenge because we're now in a different situation. But the capital situation, so that the credit risk or even the liquidity, then that seems to have been more focused now in people's minds, certainly based on the conversations I've had. Just go through to another question. So what kind of changes are you planning to implement in the future to ensure you're prepared to face another big fallback such as COVID-19? So I guess that probably sits best with our two insurer guests. So, I mean, Lance, do you want to kick that one off?
Well, I think it's an interesting question for us that for many years as a company, when we talk to our investors, we're often criticised for having a lot of capital and for having very high levels of solvency, and we've always been very clear in our communication in terms of saying, well, just to have a high regulatory capital ratio is not the only thing that we look at, and we have our own economic models, and we're always aware of stress. And one of the reasons we hold capital is for stress, and I think this is just such an event. I mean, just when you look at the COVID is fascinating because of these second order effects and the massive economic effect that has happened. And of course, actually, I mean, you're talking about a second wave and whether a second wave will make any difference. But actually, you haven't finished the first wave yet, and we haven't seen the economic fallout of the first wave in terms of reality, I would say, yet. So, there's still a lot to come. And I think, balance sheets they've been tested a bit, but I'm not sure that they've been tested to the level that they're going to be, even if things do remain calm. I mean, I have to, I'm sitting in Hong Kong where we're now on our third wave. So I'm not trying to be too pessimistic, but I think we have to prepare for things that are happening that you haven't really seen manifest yet. So actually, we're pleased that our balance sheet has remained, in a good place, I guess we feel that that prepares us reasonably for things that could happen. When you look at interest rate movements, which I mentioned earlier, I think the movement in the US is way over a 1 in 200 year event. So it's hard to see how you could really factor something that's even worse than what we're seeing today. So I think if you can withstand now, you should be pretty well prepared.
Looking forward to playing that quote back in a few months' time, Lance.
Which bit of it?
Yeah, just going through the questions here. I think we've got time for one very quick question, actually. Excuse me, my voice seems to be going just in time. And maybe this is just a quick feeling here. Someone has asked if we expect any shifts between the investments in different financial assets, given what has happened, or will it be like, like every other situation where people's memories, they soon fade and they carry on doing what they've always done. So do you have any thoughts on that, Angela?
Yeah, and I suspect it will, and it will. And what my answer to the previous question was going to be, actually, you know, I think our scenario planning is works okay, but needs way more. And I think the scenario planning in some of these areas is going to be what drives us to invest in different companies. So to the extent that we remember that things that we don't expect to happen can still happen, that will influence some of the investment decisions that we make between sectors, I suspect.
Mm.
Any further comments from Graham or Lance?
No, I agree.
You agree?
Yeah, I agree
Good.
as well.
Thank you. So that's a good note on which to end. So thank you, everybody. Thank you, audience, for your participation. Thank you, panel, very much. I think just to wrap up and excuse me, try to summarise some of the thoughts that I think came out. I mean, there's quite a few areas for insurance management teams to focus on if they want to sort of maintain a winning business, if you like, and allow them to serve customers, their stakeholders, in admittedly a niche-shaped world. And I think that the three main things I've picked up from this, and obviously you may have different ones, is we seem to need a high-level strategic assessment to be in our heads all the time, based on our best guess of what the economic scenario might play out as. So to continually assess our business against that. Insurers' role in society has actually come out, I think, as quite a strong positive, and maybe there's more we can do to nurture and promote that to its best effect. And I think finally, thinking how quickly we got into this situation, there did seem to be something around whether we now need to improve efficiency, effectiveness, maybe to rescale and restructure, or even to think if that transformational initiative that you've got on the go is that the right one, doing the right thing. So I think there are some big questions there, so for some interesting times. So thank you very much, everybody. Thank you again to our speakers. Thank you to the audience. This session has been recorded. It'll be on the IFoA website for a year, I think, in the usual place. So thank you very much and goodbye.
Thank you.